This week, it's very important to understand what the institutions are doing because it is now moving into a liquidity-driven environment, and that is exactly where a lot of traders get trapped. And that's because the market is currently driven by war, inflation, and central bank uncertainty. So let's go over the exact fundamentals that are moving each pair, how institutions are positioning themselves, and the exact entry models that we're going to be using. Starting off with US30, and actually in general, the entire market is reacting to one core theme, and that is the Iran war, which led into energy disruption, which is now leading into inflation risk and ultimately delayed rate cut expectations. The most important headlines that we're following this week is the tensions that are rising between the US and its allies. Energy routes like Hormuz are still unstable, and even though supply is trying to normalize, it's not fully resolved just yet, which creates a very specific trading environment. With inflation risk as it continues to increase, especially with CPI and core PCE that's supposed to come out this week, that's going to lead into a further bearish sentiment for rate cuts. Central banks right now are forced to stay cautious all across the board, and markets are moving into uncertainty rather than a trending market environment. So what that basically means is that institutions are not aggressively buying or selling. They are currently hedging, rebalancing, and waiting for the data points like CPI and core PCE. When we look at US30, based off of the daily time frame, we ran into that 50,000 mark and then sold off aggressively. That is your textbook style distribution. When we come on to the 4-hour time frame, we see that the equities right now are reacting to those rising geopolitical risk, higher for longer interest rate expectations, and inflation uncertainty from energy disruption, which means that the institutions are now starting to reduce risk. They're not panic selling, but they're not buying aggressively just yet either, which is what we call the controlled risk-off environment. On the 4-hour time frame, we see that with the lower highs and lower low formations leading into that bearish structure. Then after that aggressive sell-off at that 50,000 mark, we see a bounce from down here at 45,000 and then a pushback closer to that 47,000 mark. And that is what you call a liquidity reset. So the key levels that we're going to be watching out for this week is going to be this 45, let's say 500, which is at previous consolidation level support, and then we see a bounce up from here. If you drop down to the 4-hour time frame, that's kind of where the 4-hour time frame pushed back above, and then wick rejections before continuation back up. So if I'm looking for any swing trade buy opportunities here, what I want to see with the US30 is price pushing back down closer to 45,750 or that 5,500 mark to create that bullish displacement and also correct this consolidation level here, grab some liquidity levels, and then continuation back up for any buy opportunities. For any sells, we are pretty close to that 47,000 mark. I want to see price coming back and tap into it, which was that previous resistance here. Reject that, and then a continuation back down closer to 46,000 or even that 45,500 level, which is the massive level from the weekly and the daily time frame where you see that push up to the upside, and the same thing here as well. So those are the key levels that I'm going to be watching out for any potential swing trade opportunities. When we drop down to the 1-hour time frame, that's where we kind of figure out where do we want to scalp or look for our day trade opportunities. What I want to see for a quick scalp as we get closer to the New York session or even London session is price to break above that 46,800. That's a 200-point move up to that 47,000 mark. Like I said, that's a key level. After that, we're going to see if we're going to look for those continued sell opportunities to come back down into that 46,000 or even 45,500. For any sell opportunities here, I want price to come back down below this level because right above that, we have that consolidation. We have a lot of those wick rejections, and that's where buyers have been rejected repeatedly. So right now, being Asian session, I'm not really expecting to catch any move here, but going into London session, that is potentially the setup that we're going to get to come back down closer to that 46,000 level for any potential sells. For buys, we're just looking for price break above 46,800. Let's go ahead and move on to now GBPUSD. But in general, if you're trading NAS 100, S&P 500, or even US30, the most important thing to understand is that equities, they're not crashing right now. This is simply, from a technical perspective and a fundamental perspective, repricing of risk. When we look at GBPUSD on the daily time frame, we see that's clearly ranging right now. So you have your key support level down here at, let's say, 1.32. We have our resistance formation at the previous daily top wick rejection, 1.33. which is right into that previous consolidation here to the left as well. And anything here, anytime price taps into it, we have seen historically that price will push back up bullish. So that's why this is a very key level that price is sitting in, and it's also consolidating. Even based off of the 4-hour time frame, you'll start to see that more clearly here as well. From a fundamental perspective, the pound is reacting to UK economic slowdown signals, housing weakness, and soft data versus the US dollar strength. The US dollar is being supported by the inflation concerns and the Fed staying cautious. So there's no strong pound conviction here, or even US dollar being slightly stronger. That's why we're seeing that we're sitting in a range at the moment. If we're going to look for any buy opportunities, I want to see that rejection back into that 1.32 level right here, into that support, and then a push back up for about this entire range, which is closer to 100 pips. So those are going to be our buying opportunities. For any sells, we're looking for rejection of 1.33 and then push back down. This is in the middle of the range. That means that we're not going to be trading this at all. This pair right now is being traded by institutions as more like a mean reversion environment. So we're not trading this. We're not looking for any day trades or scalp opportunities. This is simply going to be swing trade opportunities after price rejects off of these daily and weekly levels. Then we have our EURUSD. Euro right now is weaker because Europe is highly exposed to energy disruption. LNG plus the fuel dependency risk is rising, and the economic outlook is weakening. So what that means from a sentiment perspective is that Europe is a lot more exposed and sensitive to the geopolitical tensions, and the US dollar is relatively stronger right now, which is putting that bearish pressure on EURUSD. Based off the daily time frame, we're also sitting at a support level at 1.152. We have our resistance, which is that previous support right here at around 1.16. Same thing, we're looking for our swing trade opportunities. Nothing to day trade or even scalp here based off the 4-hour time frame. Price push back up closer to that 1.115.7 level, and then it's starting to push back down. But you can see how the 4-hour candles are also quite weak here, where it's not really breaking the previous 4-hour lows. But we are starting to see some bearish pressure as we get closer to that 1.152 level. So same thing that we're going to do with GBPUSD. I want to see that support level being swept, being rejected, and then look for those buy opportunities to the upside. And that is a range of about 80 pips. Or for any sell opportunities, I want 1.16 to be rejected and then push right back down. EURUSD here is not in a trending environment. It's reacting to that relative economic weakness from a fundamental perspective. Let's go ahead and move on to GBPJPY, because this is where we're going to catch some day trades and even scalp opportunities. Based off the daily time frame, it's quite bullish. Lower time frame, as you get down to lower time frames, you're going to see it's a little bit messier, and that is because simply based off the daily time frame, you can tell that we're entering back into a daily consolidation level. So when that happens, always expect that price is going to be a bit messy. As you drop down to lower time frames, you are going to have tighter ranges. So that's where you have to be a little bit more patient with your trades. Based off the daily time frame, we are exactly into that resistance of that previous consolidation. Drop back down to the 4-hour time frame, and we see that rejection into 211.5. From a fundamental perspective, again, the pound is kind of weak, neutral. The yen here is a safe haven currency, but it's also weak structurally, and that creates a conflicting flows, no clear direction, choppy market environment. Same thing here. We're going to wait for that rejection, and then we're going to wait for a clear resistance to be formed here. So I want to see the first 4-hour candle here closing bearish, and then the next one continue down. For those sell opportunities to the downside, for any buy opportunities, I want to see a rejection of either at the bare minimum right here, which is your 211. So rejection of this and then push back up, or come back down deeper into 210.5. This pair moves on liquidity and not necessarily direction. So you're going to have a much better chance to trade this in London session or even the London and New York overlap. USDJPY is a very important pair. A couple of weeks ago, I posted a weekly outlook where we went over DXY and even the Japanese yen index. We talked about every time Japan or the yen here reaches 160, the risk of the Japanese authorities interfering into the currency market increases, and that's exactly where we're sitting right now, into that 160 level. If we come back to the weekly time frame, zoom out, then we see that we're pretty much sitting at these all-time high levels here for this pair as well. So you have all that risk that's happening from a geopolitical perspective, from a fundamental perspective, and then also the risk of the Japanese authorities stepping in as we get closer to 160. So this is kind of a messier pair, but I'm following this pair just to see what's happening when it comes to the capital flows, if we're seeing that the dollar is still holding on to support, or if we're seeing a much bigger flow coming back into the Japanese yen. So here, based off the daily time frame, we keep rejecting that 160 level. And from a fundamental perspective, the US dollar is still strong from those inflation concerns, and I'm expecting to see that same thing throughout this entire week until we get CPI and core PCE. Bank of Japan is still accommodative, but intervention risk is still very high, especially as we get closer to 160. So from a sentiment perspective, what we're seeing is that the institutions are long on this pair, and we're clearly seeing that from that bullish perspective or that bullish movement to the upside, but they're still also extremely cautious at these highs. When we drop down to some of the lower time frames, on the 4-hour time frame, you see all that consolidation a bit more clearly. So here, for any sort of buy opportunities, I want to see a rejection back into the support of 159.4 or even a little bit deeper, ideally deeper, just so you can grab some more liquidity from down here, and then continue pushing back up. When that happens, we have a range of about 115 pips to the upside. For any sell opportunities, I want to see 160 being swept. I want to see a rejection like we have seen here in the past, and same thing, catch those 115 pips to the downside. This is not a retail friendly zone here for this pair very specifically. This is where the institutions will trap the breakout buyers and distribute positions. So that is why I will personally not be trading this pair actively this week, because I'm going to be trading US30, GBPJPY, and we're going to move over to gold in just a little bit. Those are a bit more clean, but this is a very important pair to keep watching just to see what's happening from a fundamental and a market sentiment perspective. Now, going over to gold, we see a massive rally here on the daily time frame, and then we start to see a little bit of a correction, and right now we're sitting in this range. As we drop down to lower time frames, you start to see a bit more consolidation. From a fundamental perspective, gold is reacting to geopolitical risk, hence it's bullish. Inflation concerns, hence it's bullish, but stronger US dollar, and that's why we're starting to see that range here a bit more. So this is creating more of a conflicting force, and there's no clear trend here at the moment either. For any buy opportunities, I want to see this previous daily low here being swept, which is going to be 46.22, and we can adjust that as we drop down to lower time frames, and then push back up for any buy opportunities to the upside closer to 4,800. 4,800, I'm just going to put 4,800 flat. Seems to be a very important level previously as well, support and then current resistance. Drop down to the 4-hour time frame. So if price breaks below that, then we can look for those continued sells if it breaks below that 46.22. And the next key level here is going to be that 4,500 mark, which is right around here. So that is where we had that break and retest, push back up, break and retest here, and then continuation closer to that 4,800. So if we're going to look for any quick scalp opportunities or even day trades, we can look for sales to come all the way down into 4,500. If not, just a rejection into that 46.22 and then a continuation up after an established support like this is enough for those buy opportunities to go back into 4,800. So gold also is not trending, but it's being traded as a reactionary hedge at the moment. This week, we have a lot of data points that are coming out, starting off with the FOMC meeting minutes on Wednesday, then we have the core PCE on Thursday, and then we have CPI data that's coming out on Friday. So the only thing that we really care about when we're looking at headlines or even economic data points is inflation still sticky? If it is, then we're going to see that the US dollar will continue to get stronger, equities will weaken, and gold will become more volatile. If inflation is still not sticky and we start to see that CPI data starts to drop back down, if it's not 1%, let's say it's sitting at 0% or even goes into negative, which is highly unlikely, then we'll see more risk on returns. Equities will push higher and the US dollar will weaken. So again, this is going to be a liquidity driven market. It's not a trending market. So this week, our edge is going to be to wait for those liquidity sweeps, any structure shifts and confirmation, and then look for our entry. I will see you guys in the next weekly outlook.